Hello traders, and welcome to the market update for the week ending 21st of January 2022. Today what we're going to talk about is the stop loss positioning. I'm JG, member of the Vedanta Elite trading team here at Master the Markets, and I look forward to taking you through the market update for this week. Stop loss positioning. What I mean to say is what we're looking at is, for example, if we're going to take a trade on a primary setup, then what we're looking for is, if I draw a primary setup for you, we get, and then the market turns, okay, and we get a bar which opens to the ups, which is to the upside, and a green bar. So you've got three red bars and then you got a green bar, okay, opening to the upside. What we're looking for here is what is the relation for our closed position, okay? So if I put the closed position there, in one example, now if I go to another example here, where you got the similar pattern of the three bars, or how many bars you do get, and then you get a bar form to the upside. However, on this one you can see that the closed position is slightly different, okay? So the difference between the two is we have the lowest low of the setup by this, denoted by this red bar here, and then we have a turn where the high of the following bar, the minus one, so this will become the primary bar. The primary minus one, you can see it's taken out the high of the prime minus one, okay? So this becomes a 3-bar primary bar pattern, okay? And then what we're looking for is the close in relation to the chart itself. So when you see a close there, or you see a close there, where are we going to put our stop loss? So what tends to happen is when you have a setup like this, everybody looks at it and says, turning point. So it's obvious that the market is definitely going to go to the upside, okay? Everybody's expecting this to continue to go to the upside and take us into a profit, okay? This is what the market and everybody looking at the market assume is going to happen. However, what we're looking for is, if that does happen, sometimes what will happen is the big players in the market will let the market spike up to trigger us in. So if we had an entry point at the high of this bar, then it would spike us in, and then shortly after, what happens is the market will turn and continue to the downside and takes you back out, okay? So you've been spiked in and then taken back out. However, if it does do that, and you have your stop loss quite tight, then it's going to hit your stop loss and you're out of the trade. However, if that happens and you had your stop loss at the correct position, then we could see the market move again in our favor, okay? So a little bit messy, but you'll see that the market comes down. We place a trade on a primary bar pattern, okay? It spikes us in. If you have a stop loss too tight, so if I put my stop loss line on there, this is my stop loss line here, and if I put my stop loss too tight, as you can see, this one here, let me clear this up for you a little bit because it looks a bit messy, okay? Okay, two scenarios, okay, we have here. So you either have the first scenario here where we place our entry, we'll get triggered into it, and the market will go to the upside and off it goes, or it spikes us in and then retraces and comes to the downside, takes us out, hits our stop loss, takes us out, and then rallies back up. However, if we had placed our stop loss a bit more conservatively and put it at the low of this bar here, then as you can see that we would have missed being taken out of this trade, and then we could have taken the trade and ridden it to the upside here, okay? So that's all in relation to where the stop loss is, okay? However, if we were to see that the stop loss was to be a little bit tighter, if this was a green bar and the close was at the lower end of the bar, we could in effect place our stop loss tighter onto there, and then when the market moves, let's get the right pen for you, the market moves to the upside, okay, then would be triggered in and we can ride that wave. However, if it did have a little bit of noise in the market and it moved against us by opening and then coming to the downside first, it makes no difference to us because we haven't been triggered in yet, okay. For those who had put their stop loss there, our end, it would hit us, then the stop loss, but it wouldn't trigger us because we're not being triggered in, and then we're waiting for the market to rally again, okay. So the noise has happened, it's gone down, and those that have taken it to the downside are already in, but we've taken it to the upside, and then the market rallies and takes us into the trade. So it's already triggered down a little bit, hit the stop loss, but it makes no difference to us because we haven't been triggered in, because our entry would be at the high, and then as it rallies again, it takes us in and enters us into the trade. Okay, so you either get aggressive or conservative when you place your stop losses. And this is when you're doing your own trading, you can have a look at the charts and see where is the entry point for me or the stop loss for me on this particular trade. We can have a look at some of the live examples on here.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
If I was looking at a swing bar pattern forming, so here we have a swing there. The lowest point, as you can see by our smart money indicator, which is exclusive to master markets, we have the lowest point there. So there you are. This is your 3-bar primary pattern. It's taken out the high of the primary -1. Okay, so we're looking at a turning point. So we place our entry point at the top there, and then our stop loss can be at the low of the primary bar itself. As you can see, the close is at the low end of the market. So even if it makes noise and hits the stop loss, makes no difference because we're waiting to take us on an entry to the high side, and then as it rallies again, there you are, we've entered into the market and off it goes. Okay. However, if it was the other way around where the close was higher, let's find you an example on here. So say we looked at a primary bar pattern, a little bit of inside a bar there. So we'll take this as a swing high. Okay, that's your primary -1. This is a inside the bars there, and then we'll say this is your primary -1. So if you were going to enter on the low of this bar to the downside, and we can see that the close is much higher on the primary bar that's actually taken out the prime -1. We'll put our stop loss a lot tighter. Okay, so instead of going at the high of the prime bar, we can go to the prime, because even if it does come down, as it did in this case, it's come down a little bit, but it hasn't hit our stop loss, and then it's rallied and gone to the downside, which is the direction that we were taking the trade in. Okay, so that's just positioning your stop loss. You either position it on the bottom of the primary bar, or the primary bar -1, depending on where the close of the primary bar is. Okay, so that's stop loss positioning. Let's move on to having a look and see what the markets are doing for us this week. So on the Euro USD, there you are. Slight bit of consolidation in the past week. So since last month, so should I say for the past, if you can see from like towards the end of November, it's kind of pretty slow, and then in January we've started seeing some more movement in there. So we have taken a few trades on the Euro USD, for more to come for sure. A little bit to the downside at the moment as of overall. Dollar Swiss, we're seeing some good moves on the dollar Swiss, and at the moment we've got a swing low confirmed from on the daily charts. So as you can see, the markets are rallying back to the upside, and it's still showing some strength and some movement to the upside, as you can see from today's bar. Pound dollar, a good run for the pound dollar this year. As you can see, is moving higher and higher. A little bit of weakness in the market this week, but again, it's rallying back to the upside at the moment. So it's possible we've seen some highs there. There may be potential for this to move to the higher side. Dollar yen. We've got some movement on the dollar yen. It did try to come down further, but as you can see, there's a bar there, and it's come to the downside, and then it's not held, and it's gone back up, and now we've got another move to the downside. So something to keep an eye on. We will be looking at seeing if we can get a swing low confirming on this to take a trade up on the cash-in strategy that we are employed. The Aussie dollar, good movement on the Aussie dollar. It's generally to the upside as you look at it from week to week, but slight move to the downside, and now is rallying again, looking for some more movement to the upside. There is potential for this to go a little bit higher than where we are at the moment. Euro yen losing some strength here. It's more movement to the downside. A couple of big bars involved here, and as you can see today, we are still looking at a move further to the downside. So they've probably got a low confirmed here. There's probably still more available to the downside on the euro yen. The FTSE going from strength to strength. Good run to the upside. It is looking like it's coming to a peak at the moment, so we'll be waiting for an opportunity to see if there's a swing high confirming here, and then if the market is going to rally back to the downside. As you can see, we've had a good run to the upside here on this phase, basically this year. And the Dow Jones, slight move to the downside on the Dow Jones. A couple of big bars formed here to the downside, but again, today's bar has rallied a little bit to the upside and still showing some more strength. It's possibly a good move to the upside coming up shortly on the Dow Jones, but you can see that there's a general trend to a higher highs on the Dow. Coffee, we've had a couple of good runs on coffee as well, and there you are, another one there. Still got some room for a move to the upside on coffee, and it's working quite well for us in some of the strategies that we have running here at Master Markets. Brent Oil, we took a trade on the Brent Oil here, and that's done us very well. It's only just taken us out yesterday, so there you can see we've come out of the trade yesterday, so we had a good run on the Brent Oil. Okay, looking for a move to the downside now on the Brent, but at the moment it's still showing some strength at the top. Gold, a little bit of a sideways move in the past week, and then now it's jumped to the high side. More strength available to the upside on here. Something to keep an eye on. Further on, let's see how it goes for next week's market update and where the gold ends up, but there should be some more available to the upside on the gold. And on Bitcoin, yes, we've obviously seen some highs in there towards the end of last year, but now was a slight move to the downside. If you're looking at the daily charts here as we are, then you can see there's definitely a lower highs and lower lows forming on this. So there is possible for it to go further down. But then obviously Bitcoin, quite a volatile one, and it does have its moments where it'll peak up again. So something to keep an eye on for us on the Bitcoin. Okay. So that's the market update. And what we'll do is we'll go through the figures for our two trading rooms this week. So the first one being the elite room, and on the elite room this week we had on the primary runners, we had nothing on the primary runners, but on the cash in where I told you about the Brent Oil, we took the trade and that gave us a return of 2.34%. On the cash in 100 pips, we had a loss of minus 0.70%. Continuation patterns, we did have a trade on there with a very small loss of minus 0.23%. So giving us a total for the elite room of 1.41% to the upside. So a profit there on the elite room. And on the live trading room, on the lift-off strategy, we had a loss of minus 1.80%. With a few trades that we have taken on the lift-off strategy this year. With the cash-in strategy, on the primary runners, TSL primary, we had a 1% loss for the primary runners, but on the cash-in 80% open equity strategy, we had a upside of 1% on the trades that we have taken there. So unfortunately, the cash-in has balanced itself out with one going down by 1% and one strategy taking it up by 1%. So that gives us a total of minus 1.80% for the live trading room. When we put them both together, the elite room and the live trading room, the total we get from both rooms is minus 0.39%. So that's less than 0.5% down on this week's trading, which is good with the number of trades that we have taken, and there were some good moves on there. So, once we start capturing some of these longer moves and the bigger moves, then we can see some of this profit coming back in our direction. Okay, so that concludes the market update for this week. And that leaves me to say, until the next time, stay disciplined, follow the plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.